were talking earlier in the program about what we could actually expect from Nvidia, and I'm curious about the sticking points in your view. How does this kind of change the picture, not just for Nvidia, but set the tone for the broader tech sector?
Okay, no, good question. I think, with the volatility we've seen in Nvidia's outlook and question marks that have been raised several weeks ago with the delays on the Blackwell chip, I think there have been bigger fundamental questions asked about the sustainability of demand within the AI sector. Whilst I think the long-term outlook still looks good, and there are plenty of applications where this new technology, has significant use and should realize cost savings and efficiency savings in the long run. The question mark at the forefront of people's minds at the moment is, companies are, driven by fear of missing out, are spending significant amounts on capex at the moment. 10 billion plus in capex per quarter. How sustainable is that if they're not monetizing it at a fast enough rate? So I think that sort of medium-term question is an overhang on the sector at the moment. The degree to which Nvidia can address that concern remains to be seen, but we'll hear on that from the results later today. And then obviously there's all the near-term potential execution risks with the production delays that we've seen on Blackwell, which caused the volatility several weeks ago. So again, that's going to be another core focus for these earnings.
Well, talk to us as well about where this demand is actually coming from. You use that keyword sustainability as well, and I think the concern around here is that these hyperscalers can't continue to fund, I think it's somewhere between 40 to 50% of Nvidia's bottom line. Where else is Nvidia seeking that demand from?
Yes, absolutely. It's a very concentrated customer base, particularly on the high-end data center business at the moment. So they're looking to broaden that business out, try and increase demand from a broader range of lower-end corporate customers. But again, these chips are not cheap. Depending on the variant you look at, they're sort of $20,000, $30,000 plus. It's an expensive hobby. So there needs to be a firm business plan and a realistic chance of these companies monetizing and breaking into profit. Plus, they need the balance sheet as well. It's an expensive business to get into. So again, I think these are potential barriers to the wider proliferation of this technology outside these cash-rich hyperscalers. I think there is potential demand there, but again, is it going to match market expectations with the stock pricing in so much, and at still a fairly punchy valuation compared to its peer group?
Over the last 3 years, Nvidia's stock has experienced significant growth, mostly due to its early advantages in the artificial intelligence, AI, infrastructure development. But after such a significant rally, the issue is, where will the stock go next? Let's examine how Nvidia got to be the market leader and where the stock might go over the next 3 years. In order to speed up graphics rendering in video games, Nvidia first created GPUs for the video game industry. The business rose to prominence in the field and in 2006 developed the open software platform QBA, which lets programmers directly program the company's chips. Since Nvidia dominates this large but rather specialized market, developers were typically instructed to use Nvidia's QDA tools to program GPUs. GPUs eventually began to appear in various applications because of their powerful computing capacity. They started to be utilized for mining cryptocurrencies as well as the automotive industry. Since its 2020 acquisition of Mellanox, a networking startup, Nvidia has been talking about artificial intelligence in the context of data centers. But last year, ChatGPT contributed to the mainstreaming of AI, and Microsoft's increasing funding and collaboration with OpenAI, the company that created ChatGPT, subsequently sparked an arms race in AI infrastructure. Large language models, LLMs, and AI inference depend on GPUs, which are now the foundation of the AI infrastructure. It so happens that Nvidia is the world's top GPU manufacturer. Even though Nvidia may not have foreseen the abrupt spike in demand for AI-related GPUs, it had established itself well in advance as a leader in AI in the data arena. With its software platform, it had also established a broad moat for GPUs many years prior. Retraining developers to utilize software from competitors is time-consuming and costly because they have been trained on the company's software. This should assist Nvidia in maintaining its leadership position in the GPU market, along with further innovation. The business is cutting the length of its development cycle from 2 years to just 1 year. Despite the delay, the company plans to start shipping the new Blackwell architecture by the end of this year or the beginning of 2025. It plans to introduce its new Rubin architecture in 2026, and it has already made that announcement. Nvidia should be able to preserve its price, power, and technology lead thanks to this longer innovation cycle. The main factors from there are demand and the quantity of chips Nvidia can produce. If you want to keep up with Nvidia's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the markets, so click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
Welcome back to the watch list. I'm Nicole Petalides. Shares of Nvidia moving higher ahead of the highly anticipated earnings report due out tomorrow afternoon. Options traders are making their bets on the swing either way. But I'll tell you, most of the people I speak with are expecting something good out of Nvidia tomorrow. Is that a problem? Logan Gillen's with us, analyst at Jewel Financial, and Will Rind, founder, CEO at Granite Shares. Logan, I'll start with you because almost every person I speak with, while they seem a little cautious, they think something's coming out of Nvidia that they're going to like. Is that too much optimism?
I actually think it is to some degree. I like how you said that it is highly anticipated with that emphasis. Oh my goodness, it seems like every investor out there is holding their breath for this one and is looking towards this number. It's really interesting to see where the consensus numbers and even the whisper numbers have been over the last couple weeks, just anticipating what is happening in this earnings report. And I think basically perfection is baked in. The look is that they're going to blow numbers out of the water. Consensus numbers, if you look back 2 weeks ago, were about 59 cents for earnings. Now they're at 65, with the whisper numbers being closer to 71 cents per share. So there is a lot baked in. There's a lot of anticipation. I think it's overdone. I think that we're going to see some sell the news after this comes out on Wednesday afternoon and into Thursday. The interesting thing for us will be to see how it affects the rest of the market. But again, I think there's basically perfection baked in. There's so much enthusiasm about going into this report, but there's a lot of nerves as well. And I think we'll see sell the news because of that.
Look, I mean, the Blackwell chip was also highly anticipated and delayed. The Hopper chip certainly had a lot of fanfare. Will, what say you? What kind of expectations do you have for tomorrow?
Look, this is the most important earnings call of this Q2 season, maybe even the most important earnings call of the year so far, even eclipsing the most recent comments by the Fed chairman about the potential rate cut in September. So this is absolutely huge tomorrow. And I think, again, this is going to be good news from NVIDIA. And probably, like for your last segment, as your guest was mentioning, that this is really about leadership in terms of driving the entire market higher. And I think the market's looking for a catalyst to go higher. And I think that could be the NVIDIA earnings call tomorrow.
Listen, Will, do you think tech's in favor or out of favor right now? You know, because we also watch just the news cycle or how popular tech is at any given time, Will.
Look, it's definitely in favor. It's not, a broad brush that paints all tech companies equally, but the tech trade is still very much kind of where it's at. I mean, I just look at the resilience, since August 5th, Nvidia even. I mean, Nvidia just on supposedly the news that the Blackwell chip was a little bit delayed. From peak to trough, sold off about 30%. But has been bought aggressively back along with other top tech names. So it just shows me that along with the Fed's sort of positive comments here at the market, that people are not ready to get out of the AI trade yet by any means.
From a demand perspective, it seems that the development of AI infrastructure is still in its early stages, while large tech businesses like cloud computing are increasing their capital expenditures connected to AI. Alphabet and Meta platforms have both stated that there is more risk in underinvesting in AI capabilities than in overinvesting in it. Meta has also mentioned that their Llama 4 LLM will probably require 10 times the processing power of Llama 3. In the meanwhile, Greater processing power should be required for LLMs that are more sophisticated. This implies that additional GPUs will be required later on. The triple-digit rate of growth in Nvidia's revenue that it has been seeing recently will not continue. But considering the strong demand for Nvidia's chips and the spending comments from major clients, it is conceivable that over the next 3 years, the company's revenue may increase by 30% to 50% annually. Analysts expect that revenue for the fiscal year 2025, which ends in January, will be approximately $121 billion. This would translate into revenue for the fiscal year 2028, which ends in January 2028 and is essentially 2027. Revenue growth is projected to be 50% the following year, 40% the year after, and 30% in the fiscal year 2028. Assuming a 20% tax rate on the company's operating profits and an average quarterly increase in adjusted operating expenses of 13% through the fiscal year 2028 corresponding with the sequential growth observed in the previous quarter. By the fiscal year 2028, Nvidia would bring in over $166 billion in revenue, or $6.76 per share. Nvidia's forward price-to-earnings ratio, P/E, would decrease with slower growth. Nevertheless, a multiple of 30 to 40 times on the shares in 2027 would seem acceptable if revenue increased by 30% in the fiscal year 2028. In 3 years, that would put the stock's value between $200 and $270 per share. Therefore, there's a significant chance that in 3 years, Nvidia's stock will double from its current level. So what does this really mean for Nvidia's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Well, Robert, I also want to talk to you a little bit about this kind of regional diversity that we're seeing as well, because Nvidia was one of the chip companies that had to tweak some of their technology in response to some of the U.S. Kind of sanctions rules and the limits when it comes to chip export controls to China. It's handy that you're sitting in Hong Kong, where Nvidia had to make that extra kind of chip to cater to that audience. And this is something that some of its peers have not been able to do. Micron is just one example. Intel still struggling with that pivot as well. Even ASML right here in Europe talking about how to navigate those export controls. From your vantage point, what does the broader chip sector actually look like given those geopolitical headwinds?
Yeah, no, again, a great question. I mean, geopolitics is really driving a lot of the decision making within the broader semiconductor sector at the moment, not just the issues that surround the island of Taiwan, but also the increasing economic competition, particularly in high-end technology between the US, Europe, and China. So high-end semiconductor fabrication and also tied into AI are a major driver of this increasing geopolitical tension. So that is forcing China to try and double up on its efforts to drive or to become self-sustainable, not just in semiconductor manufacture but also in AI. And the impact on Nvidia is, historically, China's a reasonable proportion of the business that's been shrinking in recent quarters. And obviously, the export bans in geopolitics are not helping the outlook on that side of business. Obviously, it is not a prime driver of their revenue at the moment, but again, it's a potential headwind that's likely to grow in the coming quarters as China again double downs on its self-sustainability objectives.
Having conducted a survey to determine investor expectations for the stock's response to the print's release, prior to Nvidia's highly anticipated earnings report on Wednesday, overall, the study indicates that most people are bullish going into the print. More than 3,000 people have voted in the poll that was released on Monday, and 41.5% of them think that Nvidia stock would increase by at least 8% when markets open on Thursday as a result of the company's results report the previous day. In the meantime, 24.9% predict an increase in share price of 0.1% to 8%. Conversely, 13.4% of participants expect a decrease in the stock price of 0.1% to 8%, whilst more than 20% predict a noteworthy reduction of 8% or greater. After the market closes on August 28, Nvidia is scheduled to reveal its second quarter fiscal 2025 earnings. Investors will be keenly observing if the company can affirm that the data center business will continue to grow, as well as any updates on any delays in the delivery of the new Blackwell AI processor. Visible Alpha reports that Wall Street analysts predict Nvidia's revenue to reach $28.84 billion, more than double from the same quarter last year. Additionally, it is anticipated that net income will more than double to $14.95 billion. With a roughly 160% gain this year, Nvidia has more than doubled in value and is now among the best-performing stocks in the S&P 500. Over the course of 2022, the stock has increased by almost 783%. The results announcement on Wednesday will be significant for institutional and individual investors alike. To justify its lofty valuation, the Santa Clara, California-based corporation needs to provide solid performance and upbeat projections. Nvidia's current valuation is 47 times forward earnings forecasts. The only other Magnificent Seven with a higher valuation is Tesla.